So hello, active traders, and welcome to our Trading Week Ahead broadcast. Today, Saturday, April 15th, 2023. I'm your host, Ken Calhoun, president of Trade Mastery and the original Day Trading University, coming at you live from Colorado here in the middle of April. Getting ready to speak a money show in a couple of weeks, so looking forward to that. Hopefully I'll see some of you there at Bally's and, well, now Horseshoe and Hotel Paris. So what about gold? Gold has been really strong lately, okay, and it's been going up, and it's very likely to reverse back down any second, right? So I'm not gonna pitch the continuation because it's been running for a long time. I think the play is going to be in dust. They always keep you guys thinking, right? Keep you on your feet. When it's been going up long time, it's probably going to stop and go back down at some point, right? Now, when that occurs, it's anyone's call. But for now, right now, I think a really smart idea was, again, not a trade recommendation, but to consider dust, the inverse gold. It goes up when gold goes down, called dust, like what gold turns into if you crunch it. Anyway, dust over 10, keep that on the radar, okay? Now let's take a look at the broad market, and we'll start with that, and then we'll come back to our gold and other sector plays. Also, too, as always, it'd be my honor to help you with your chart. So if you have any charts you'd like me to pull up for swing trades, at least, go ahead and post them there. For day trades, we cover those in the live room as well. But if you have any swing trading chart tickers, go ahead and start posting them. All right. Hey, thanks, Bob. Good to hear. Sounds good. All right. So the S&P's going up here. It's been running for a while, but we're right at resistance right near the 4,200 mark. So we only have a few more handles left before the S&P tests resistance. And because of that, right this minute, is a smart time to start considering going in the inverses, the things that go down, that go up when the market goes down, right? Like our SQs, SOXS, TZA, LabD, and others. So my message to you right now is that we are at a key inflection point. We're at a point where the market's starting to look like it's going to take off or something. And that's always a good head fake. Okay, it's a good time to go opposite of what the talking heads on television say, because they're almost always wrong. Professional traders, we know how to time the reversals. So now is the time to start looking not for continuations, but for reversals. So I'm more 80% reversal oriented, 20% continuation. So sure, we'll buy new highs and things that are going up, whether it's gold and crypto, but you should also have a hedge plan in place as well. How are you going to profit when the market unexpectedly drops because there's bad news and the market's going down and crashing and blah, blah, blah. And you guys are unaware, you're unprepared. Prepare for the market to go down more so than the market to continue up. That's my message right now. We're still in a very bearish economic environment with inflation through the roof and all kinds of rate hikes and problems out there in the world. I don't see any big headwind for the markets to go up. We have lots of taxes and idiots in Washington and all that kind of stuff. So for that reason, it's like that old TV show, The Addams Family. Remember? And Gomez would always say, his henchman would say, the markets is crashing, boss. What do it? He's going, buy. Be a contrarian right now, all right? Because we're at resistance. There is a technical reason. We are at resistance. Now, if the market goes, the signal is, if the market goes up above 4,200 for at least 3 days, that's an old Wall Street trick and it works. 3 days in a row is a good determination of a trend continuation or reversal. If the market breaks resistance over the 4,200 and goes up for 3 or more days, okay, then we put our bull hat on. But for now, I think this is a very good time to start looking for reversals. And the same thing holds true for that. If we see a bounce in the inverse instruments, like SOXL or SQQs would maybe be a stronger one, or even our VIX instruments, if we see a move 3 days up, Boyle's a favorite, okay? Boyle's been up lately. Natural gas, this is the risky and often maligned, but I think now is probably a good time. We got a bullish pattern here. Who can tell me the name of that candlestick pattern? And do be sure to learn from exclusively my colleague Steve Nissen at candlecharts.com for how to trade candlesticks the right way, not the copycat way, but the right genuine expert way, candlecharts.com. It can really help. This stuff works. So I vouch for it. I've been trading what I like. Learned from Steve for 20 years. It works. So anyway, what's this pattern? Wow, okay, yeah, I got a lot of you. Dana, Bryce, Daphne, Kent, John, Gary, John, Stephen. Yeah, it's a bullish engulfing. So we have a bullish engulfing off of a whole number support. Now it's critically important when you trade cheap stuff like this, use the whole numbers as key support resistance. Very obvious, right? Very easy to remember. So if we break over what? We break over 350, get the party started. But the key trigger point, and again, this is not a trading recommendation for educational use only, blah, blah, blah. If it gets over 4, load the boat on boil is what I'm going to do. So natural gas, because look where it came from. I think it might be a little bit oversold. And this is a commodity play. So natural gas being extinguished, but it'll come back to life at some point and it'll boil hot as our play. And remember, I gave you guys the winning cold call on the way up from 20, right? I gave you guys cold on a silver platter at 21. That's where I bought. I bought 21 and sold, no, about 21 sold 63 in KOLD. Okay, that's the neck. Now I haven't traded it since. When it hit 63 on the pullback, way back here, it was way down at 21. Let's see. Give me your tickers too. Post tickers, what you want me to follow. Here in this Saturday event, I was giving you guys this at 21, right? That's where I bought at 21, and I sold 63 for the natural gas inverse. I haven't touched it since. Maybe I should have, but I haven't traded cold since. So that was my one big play I made, and I made money with it. So that's good. Now I'm looking for plays in it's opposite. I really like playing opposite ETFs because really good volatility in BOIL. So, wow, lots of tickers. Thanks, guys. I'm gonna have to scroll back and look at those. We're gonna move on to your guys' tickers in just a sec. But BOIL, that's one of my top plays. Seriously, that's a top play. That's probably really gonna make a lot of money potentially. So remember I said this. Remember Calhoun was saying buy BOIL when it was 3. Now it's 15. I wish I'd listened to him. You'll hear that this summer, right? Anyway, keep an eye on BOIL. But let's look at buying strength too. So back to our charts. GDX, my favorite chart right now. Gold has been up, but I think it's about time to stick a fork in it. I would trail a stop if you're in at say 34.5. Now, what else is strong? Bitcoin related stocks have been strong. Riot, blockchain, and Marathon, my two favorites. And we cover these in the room almost daily, especially Marathon, MARA. That's one of our favorites, and MARA has been a spectacular runner lately. Another good one is Facebook/Meta. That's kind of expensive for my taste. I don't like trading $200 stocks, but for those who do, have at it. That's a wonderful looking chart. And Apple, of course, also a good bellwether chart for a good play as well. All right, now let me see if I can. Oh, so many of you are posting tickers. I'm going to apologize in advance for, they're just scrolling by. There's so many hundreds of people and it's scrolling by the tickers. I'm going to have to scroll back up here and see. Wow, some of you guys have a lot. Okay, I'm going to start looking at tickers of your guys' choice. The other thing I want to look at, so I covered, let's see. Actually, I gave you resistance on the S&P. Let's give you support as well. 4,200 if we have 3 green days above it. Obviously, I would use right here, say 40.60, right? That's kind of obvious, and that makes sense. If the S&P gets under 40.60 for 3 or more days in a row, then you want to put on your bear cap and start maybe buying index puts, buying your inverse ETFs, and or shorting individual equities. So that's in the S&P. Now, if we look at our VIX, the 20 has always been kind of the bellwether resistance area, and to the tick or whatever, that's the exact resistance. So we don't want to short the market until the VIX gets back over 20, right? It's been down in the teens last week, right under 20. And if we stay under 18, if the VIX stays under 18, we want to continue with our bullish thesis. But the instant it starts to flip up, and if it gets over 20 for 3 or more days, remember, write this down. Trust me, or well, don't trust me, test me. Write down what I say and see how well it works. If the VIX gets over 20 for at least 3 or more days, that's a short signal in the market. So keep it on that. I'm using 18 by 20. 18 is support, which we dropped under Thursday and yesterday, and 20 is key resistance. All right, now let's take a look at some of your guys' charts. But again, this is kind of like the role model for a perfect chart where it's stretch tight, 45-degree angle breakout, nice thin, tight channel, not loopy up and all over the place. You want charts that would not stop you out with trailing stops. Okay, let me start posting. Wow, I've got a bunch of tickers here. Thank you very much for posting them. I appreciate it because it gives me something to talk about that's new for me. So it makes it interesting for me. It makes it hopefully value added for you guys as well. A lot of tickers here from you good folks. Please be patient while I get them entered, and then we'll go through as many as I can here. Let's see. I'm not going to do the Qs because we did the S&P. And read this tiny print. I got burned trading Oracle into earnings back in the year 2001 and haven't traded it since. Once bitten, 2 decades shy, right? Let's see what I got here. AutoZone, FTK. But yeah, good news. I'm planning on moving to Vegas later this year, so I'm going to reestablish the whole seminar business down there. And for any of you who are my colleagues, get in touch. I know we do the worldstoptraders.com/trading summits.com events lately online, and we'll continue to do those, but I want to also start doing some in-person events at the MGM Grand again. So I miss seeing you folks, right? I like seeing you guys at the expos, the real traders, right? But I'm missing you guys face to face as well. I don't know about you guys, but after being stuck indoors for years, I want to get out and see, real people that I like traders, right? Not the general public, but traders I like. The general public, maybe not so much. Okay, I'm trying to get all these typed in. Again, I will apologize in advance if I don't cover your tickers because we got hundreds of you guys here. And I'm just so hold off on posting the tickers. I got more than I can handle so far, but thank you very much. WW was good. We called day trades for that. Was it day before yesterday? One of my smart traders, one of my many smart traders, Mick, nailed WW for a good call. Okay, let me see. I got so many more. We're going to start looking at charts here in less than 60 seconds. Let's see. Oh, Heidi said she lived in Vegas for 10 years. Well, get in touch with her. Let me know if any tips. I'm thinking of Veer Towers. If I can get a nice view, north view of Bellagio fountains, not the interior, but Veer, V-E-E-R. So I want to live right in the middle of action. I want to be able to walk to Bellagio or get close. Let's see what else. Okay. I think we're about done with the tickers. I think that'll do it. All right. And Schwab, the last one. All right. So let's look at charts. Let's see what's worth trading and not. And again, please do not be offended if I say your chart sucks. I'm not saying you suck. I'm saying the chart is not something that I would personally trade. This is kind of the role model. It's got good range. It's not got great range, but it's got good range, right? 27 to 36, it's good. It's not great. I prefer like 27 to 45 or something, but still, it's got good enough range. All right, let's take a look at these charts. BSM. That's good, actually. That one I'd play. It's got enough range. The main thing I like is the range and the volatility. It's got a nice recovery pattern like the market does. And again, being the whole number guy, I'd wait for it to get over the whole number 17. And where? No, somewhere slightly above the previous resistance, so maybe 1740. I would not trade, again, when you see a U shape like this or V shape, you don't trade right under resistance. That's because it'll chop and pull back. And you don't trade right the instant it breaks out because you get a head fake. In the market makers head fake, you get a false breakout. You want a safety buffer like I published for years in my Stocks and Commodities magazine article. So I'd wait till 1740 or 60, somewhere up in there to play with that one. Novavax. I see the uptrend, but that one's, yeah, it's got range. It's okay. Yeah, it's tradable. There's probably better charts out there, but that one would still pass muster. That one is worth trading north of 10, right? So personally, not a trade recommendation, but I'd go in and say 1020 with a hard stop at 950. GSM. Now that chart really sucks. Now, why would anyone trade this? It's going up and down like a sawtooth. That's a gambler's chart, and we don't gamble. We trade. So that's a bad chart. Well, that chart really sucks too because of the false breakouts. Every time it goes up, it hits people in the wallet and goes right back down again unexpectedly. Charts that loop up and down like this are especially dangerous because you get in on the uptick and it goes up another couple of days just to get your hopes up. And then before you know it, crashes down and wipes out a lot of your money. So no, we want consistency. Okay, how about this chart? No, that's choppy and it kind of sucks. It's kind of up and down, it's fuzzy, probably gets stopped out. So when you look at the chart, ask yourself, are you going to make money with that chart? How likely are you to make money if you trade that? I would say not likely. Even I would probably at best do break even or maybe a little win. So the odds aren't good. Hey, Wendy, gold's not pulling back yet, but keep an eye on Boyle in case it does. FEZ. I don't like the size of the gaps in that. That's too risky. I like the fact that it's going up, so it's not a horrible chart, but there's better charts out there. It's kind of sketchy, kind of like you're throwing darts at it on the way upside. That's not consistent. Oh no. BTRS, not strong enough, still weak on the bounce. FHN, I like the range, but it's kind of late in the bounce and it's kind of too early to be looking for a secondary play. So I don't see good entry, and I don't buy nines, right? I don't buy 19. I'd wait because people sell nines. Nines are exit targets for most of the street traders. So I'd take a pass on that. HD. Oh, that's a terrible chart. That's the second worst chart I saw today. Choppy as heck. Why would anyone trade that? Oracle. I like the uptick. I don't like the lack of range is not great. Maybe worth a shot over 100 later in a few weeks, but the risk reward, the numbers, the range is just okay. AU, that's a gold chart, and that one's great. AU, that's a good chart. That's a rock star. That one will play. Good job. How about AutoZone? Another great chart. Yeah, it's got range. It's not got great range, but the range is good enough. It's got a really good run from 64 to 75. Again, if it's got a nice like that, that's a good chart today, or it's starting to do that. That's good. FTK. Well, that's the worst chart I've seen today. BBAI. Oh, that one really sucks too. Okay, HSBC. Oh, that's even worse. You guys, are you going to make money? You really are going to trade something like that? Really? Thank you for playing the Wall Street game. Not enough range on Z. It's got a slight trend, but the range, there's better charts out there. WW is good for day trading, but not for swing trades. Because it's risky. It could easily gap back down to 6 or something. So that one's good, but more for intraday than swings. But yeah, WW, yeah, it was Thursday, right? That was the day we called that in the room. Deutsche Bank. That's a horrible chart. All right, range resources. Well, that's an awful chart. You guys, you don't trade stuff that goes up and down and chops around. You want consistency. You want things that keep going up, right? Learn breakout charts too from my colleague Harry Boxer. He's brilliant. He's the only other guy I know in the whole world out there who's good like me and identifying good breakout charts. He's great. Get his book, Profitable Day in Swing Trading. He likes those kind of charts too. See, good traders, we like stuff that goes up a lot. We don't like stuff that's iffy and choppy, right? So learn from Boxer, learn from me. We know it at thetechtrader.com. He's got a new website. Looks great. So Harry's great. SHW. Why would anyone trade this piece of? So we got a few left over here. So what's good? That one's good. That one's good. That one's okay. That one's okay. So let's kill those two. So we're left with AU and AZN. The ones that I gave you guys today were GDX. I like Riot and Marathon especially. Meta and Apple, right? See, those are all charts that are going up. And of those all, I think I like GDX the best because it's got range, it's not too expensive, it's got consistency, and it's got price action upside. Yeah, in terms of range, there's different percentages we use, but one thing I encourage you to do is look at charts that have relative consistency in them as well. One thing I wanted to mention too, before we wrap up here, well, I'll cover more charts for you guys, so post more tickers right now if you want, and we'll look at more charts. But please pick charts that don't suck, all right? Pick charts that are likely to make you money. It's like hiring an employee, are you going to ask the employee, how would you handle this problem? And they come up with a lot of excuses. That's probably not the person you want to hire. Or you ask, what's your absenteeism look like? Well, I like to take a couple days off every couple of weeks. Says, I like to blah, 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 blah. Probably not the person you want to hire. Find people who are hardworking, honest, responsible, have good ethics, good morals. They take responsibility. They're leaders, or at least they try to lead. And they're people you can count on in a pinch. Those are the people you want to work with. Similarly, with charts, you want charts that are consistent and move in a direction that can make you money. You don't want charts that are up and down and trying to change their mind or come up with excuses, that kind of thing, or choppy charts, right? You want consistent charts. Anyway, speaking of which, if you guys, for those of you who swing trade, if you missed last week's live event, it's like I was saying, I sold out the number that I limit for it. Anyway, I do have the downloadable video available through tomorrow only, and that's at trademastery.com/swing success. And if I enable that for you guys here, and thanks to Jeannie for reminder. There's the link, Trade Mastery. At least bookmark it, okay? If you found some value in what I was teaching today, take a look at this and see if for a couple hundred you get 2.5 hours, and it's not basic stuff. It's like 20 minutes I cover the basics for new traders, but 2 hours plus is advanced, and a lot of it's new stuff I haven't covered before. You know, a lot of you have been with me for years. I have some new strategies for swing trading I covered in this year's Swing Trading Success event, and it's the only time I'm doing it this year, so do keep an eye on that. And that's anyway, so a must have. All right, let's see what else we have here. That's it for the pitch. Oh, the only other pitch is, this is good stuff. I believe in it. That's why I'm doing it. Is my live trading room. I simplified this. I made it shorter and briefer and easier to understand, because I know I tend to get complicated with stuff. So I simplified the page too. So trademastery.com/live for my live room, and you can test drive it if you want. Money back guarantee on the trial, so you risk nothing, and you can join me in the live room. And we have a lot of smart members now too. It's a significant number of really smart people who have really good alerts. So we, together as a team, we work to achieve more. All right, let's see some tickers. Let's see. Hey, thanks, Matt. Yeah, I've been busy. Wow, a lot of charts, okay. And please repost if I missed your pick. I'm trying the best I can. I have hundreds of, wow, big turnout. Epic turnout today. Thanks everyone for showing up. Let's see. Trying to get these other tickers in. Team AI here. AI. Thanks guys for the tickers. I'm trying to catch up with them. A lot of posts. I'm going to wrap up here in a minute. So that, I think that's me for the tickers. Let's take a look at these. Just eyeball them real quick and see, could you likely make money? That's a great chart. So EYEN, who came up with that one? I forgot, I scrolled by. But EYN, that's a good chart. That's probably the best one that you guys came up with collectively today. So gold star to whoever posted EYEN. That's a rock star. That's a great chart. I love that chart. That's an A+ chart. That's the kind of chart we want to trade. Look at the rightmost candle pattern too. I like the small followed by large increasing volume on the right side. Candles, that's a really good breakout pattern. Again, we don't buy right under whole numbers. So I don't buy the 4.8, the 4.9. I would wait for it to get over 5. And those and other strategies are what you learn when you get that course that I just advertised. It's a great value. It's only $200, like cost of a stop or something. And you got 2.5 hours of very specific, well-defined, easy to follow criteria and patterns to look for that I haven't covered before. So be sure to get Swing Trading Success, the one I just recorded last week. Okay, EYN, that's a rock star. There, that's a good chart. The range isn't, it's a good chart, but it's not, there's better charts out there. So it's not a horrible chart. It's not a bad chart, but it's a just okay chart. So, but it's not bad. What about EGO? I think that's Echo Gold, right? That's a good chart. I like this one. The range isn't great. It's only got $3 a range for a $10, but it's got a nice consistent run. It's a nice tight, continuous run. That one could, these kind of charts often they grind slowly higher for week after week, and that's good. So That's a good chart. I like EGL. That one will pass. That's good. Let's get to NVIDIA. I think chips are may be due for a rollover, so I wouldn't be buying chips right now. So no to NVIDIA. I think it's on the way down. I'd short a loss of the 260. Not a trade recommendation. AI. We've covered that for day trading on occasion. Not good for swing trading. Inconsistent as pops and pulls back, pops and pull back. Could you make money with that? If you have any answer other than absolutely, then you don't trade it. And this one is, I don't know. So if I don't know, I'm not going to trade it. Team. Now that's one of the horrible charts of the day. That's a perfectly awful chart. It's expensive. There's no consistency. It's up and down. There's no tight range. You're fired. ISEE. That one's actually not too bad. Yeah, that one will play. That'll play over the 30 though. Remember, we don't buy nines, right? Because that's exit target. It looks expensive, in other words. So not a trade recommendation, but I'd buy it over, say, 30, somewhere up in the right above 30 area. So ISEE, that one looks good. That'll play. And oil, no, that sucks. All right, so out of all those charts, does that help? You know, you guys throw all these charts at me and then we reduce it down to a nice tight list of 4 or 5 that's actionable, right? Nothing but the best for you guys, right? So thanks for all of your collective wisdom and ideas. You have some good charts, like better than I had, right? The UIN, I think that one's better than the GDX that I had. So oftentimes, you know, with so many hundreds of people here, really big turnout, and I have some outstanding ideas. So thank you very much for being here. I do appreciate it. I appreciate all of you for your time and your effort. Hopefully I'll see some of you in Vegas, and wrap up for now. Have a outstanding weekend. And again, the 2 things you might want to register for are the live room at trademastery.com/live, mostly for day traders. That's www.trademastery.com/live. Money back guarantee on the trial, so no risk. I made a real short page now, so it's easy to follow. And you get not 1, but 3 guarantees. So I stand behind what I do. I hope that it can help. And because I learned a few things in 20 odd years. And also, if you want to join, or I should say, download the 2.5-hour high resolution video. And again, by the way, this is important. I'm a real trader. I did over 124 million worth of order flow last year, and that's my 1099 from Fidelity as proof. How many of you agree with me that only people who actually really trade and prove it should be allowed to teach traders? That's what I think, because my thing is all these educators out there, they're bullshitters. They don't have the backup that they really frickin' trade. Most of the educators are internet marketers. They're scam artists. They're BSers. They're con men. They can't teach you. Demand that anyone who teaches you how to trade demonstrate that they can trade with tax return proof, that at least they do some trading. Now, they don't have to do 120 million worth. And I'm a hyperactive trader, but at least a few million a year would be an order flow demonstrates that the person actually does have some experience under their belt. Again, you have my word. It's very much the lessons learned between all the stops I take, which is a lot, and all the wins I take, which is also a lot. The difference between those two is what I bring to you guys in my courses, right? I go through all the hard work, so hopefully you don't have to. You know, I make all these thousands of trades, and the ones that suck and cost me money, I try and do less of those and do more of the ones that win. And the differences, the head fakes, the differences, the patterns, the subtleties, the expertise is what I offer to you guys in my educational material. So it's backed by real trading. It's not just made up crap like these internet marketer competitors of mine have, right? So that's kind of what you call a credibility builder, along with all the testimonials. So I hope that helps. I hope it demonstrates competency and expertise, or at least experience in helping you guys learn the difference between at least what a real trader does and what others do. So thanks, everybody. Let's see. Oh, wow, good comments. Let me scroll down here. They're scrolling by here. Well, thanks. Hey, folks. Hey, you too. Hey, thanks, Fred. Hey, Peter. Hey, Andrea. Hey, Judith. Hey, Matt. Hey, Silver. Hey, thank you too, sir. I like those emojis. Hey, thanks, Dennis. Appreciate it, man. Yeah, try and stay focused, right? I don't do some like extended pitch fest with no content, or the content sucks because they don't even really trade. I do real trades and I teach you what I learned. So I hope it is of benefit to you and helps you guys make more money, right? That's what we're doing this for. So let's not screw around. If you guys have not yet got this, it's only $200, right? It's a bargain. 2.5 hours of specific, advanced, high resolution video tips. That's a deal, right? Go ahead and order that. Give me some money to play with in Vegas, all right? Anyway, trademastery.com/swing success. Oh, thanks, Pete. And I love your webinars. They're short and sweet. Yeah, that's what I like. Because, you know, most of us were like, YouTube, if it's more than 10 minutes, we don't want to watch it. And webinars, I think 10 minutes is too short, but 20, 30 minutes, we're good to go. You guys take care. I will see you. Bless you too. I appreciate it. Have a fantastic weekend. Order my stuff. And I think it'll help. Honestly, that's why I do it. So take care, and I will see you guys next. Let's see. I think I'm doing one. Today's the 15th. Yeah, I'll probably do one of these next week too. So see you guys next Saturday or in the live room, and have a great weekend. Take care, and let's go get them. Bye for now. Trade smart. Make a lot of money, or at least don't lose anymore. Or try to lose as little as possible, and incrementally start to make small profits and turn things around. And I hope I can be a part of that. So take care. Best wishes, and do well. Bye for now. Stay safe.